So I'm delighted now to be joined by Rob Ryan from Aristata, who is our recent investment, as Sean mentioned. Rob is founder, CEO, and head of impact. And anything else? Or is that,
I think that's it.
If you could start by just introducing yourself a little more and give us maybe 30 seconds on Aristata.
I will try, Jake. Thanks. Hi, everyone. Thank you. I am Rob Ryan, amongst other things. Aristata is the first impact-specific litigation funder. I guess what that means at a very high level is we invest in commercial litigation, provide funding for commercial litigation. We cover the costs from expert disbursements, we cover the legal costs, et cetera, and our returns are made on the basis of successful outcomes. These are invested on a non-recourse basis. What the impact means is we're able to take a look at claims that have three key criteria. The first is looking at the outcomes of the case themselves. If it's an oil spill, what is the community size? What is the cost of that cleanup? How is our investment directly supporting those outcomes? Looking at scalability and replicability. How pervasive might these issues be across geographies or across industry sectors? In the UK, you may be aware of some of the claims ongoing on behalf of looking at gender pay discrimination in supermarket chains where front of house female staff have been underpaid compared to warehouse staff that are predominantly male. If one actor in a particular industry is operating a particular way, there are likely to be similar investable opportunities, so that impact is levered up. And finally, ultimately, we're able to take a look at behavior change in a very tangible way. How can successful litigation outcomes change the financial calculus for damaging behavior in areas across the globe?
Thanks, Rob, that's great. And I was going to ask you to sort of explain a little bit more on litigation finance and sort of why you're the good guys and makes other people squeamish. I actually think that's probably given probably people quite a good sense actually already of sort of what you do. So maybe actually it'd be more interesting to move on to an example of a case that you have within the portfolio. And so maybe tell us about something you funded so far.
Yeah, sure. So I think an interesting thing that the fund is supporting upcoming involves Western Australia and the provision of social housing to First Nations and Aboriginal communities. Just by way of context, First Nations and Islander communities make up about 3.6% of the overall Australian population. Unfortunately, they make up about north of 20% of the total homeless population, and a significant multiple beyond that are in social housing of varying different shapes and sizes. The geography is in Western Australia, which means it's the size of continental Europe, but with about 6 million people in terms of total population, so very disparate, very rural. And the specific claim that we are helping to support is on behalf of 10,000 First Nations individuals who have been given very dangerous, improper housing as provided by the Australian state and their commercial outsourced third-party providers of this work. This is the type of case that Aristata seeks to fund because it highlights what we refer to as the justice gap, right? Where cases, unfortunately, in the global system of commercial litigation are not always looked at in terms of the facts, but which side in a dispute has deeper pockets and can outlast the other. So these 10,000 individuals, despite very clear evidence, very clear opportunities over many years, having gone to try to get remedy, gone to try to get better housing, have improvements in place, have simply been ignored, and as a last resort, they need litigation as a support mechanism to try to bring the state to get up to code and up to compliance. So this is a case where again, one of the key barriers is the level of financing needed. The case here will cost about 10 million Australian dollars. Impossible for this community to do that on their own. There's a need for private capital to come into this place. This is a very interesting opportunity as well because we do seek to build capacity. There is a group we're working with in this particular claim called the Gumala Aboriginal Corporation. They began life effectively as the vehicle to accept mining royalties, which is one of the main sources of income that then gets fed back to these communities. As these mines have tailed off in their useful life, they're seeking to diversify and are seeking to learn with us and co-fund this particular investment to bring that expertise into their communities so that they can work with a traditional funder like ourselves and make sure that we're able to get to that outcome. So we're very excited to have been working on this particular opportunity. The strategy is very diverse intentionally in terms of the type of impact outcomes and geographies we're seeking. I know Michael, who's on the team and was recently in Australia, diligencing this and a number of other opportunities. But this sits within a portfolio that has healthcare claims in the US, West African oil spills, dealing with sort of large multinational oil companies. We're looking at climate litigation. Sadly, there's a lot of global commercial activity that causes opportunities for litigation funds to need to come to bear.
Yeah, there's sadly no shortage of pipeline in
No,
this area.
I think that's right.
And that's really interesting what you're saying actually about capacity building there, and that looking at it systemically, and actually sort of touched almost what I was saying earlier, that some of these impacts aren't easy to quantify, but a really important part of what you do. And when you mentioned at the beginning the 3 layers to it, that third part was a really big piece of why we invested, that systemic change, the idea of holding bad actors to account, so they start to internalize the costs of whether it's the oil spills they have, the discrimination, etc., rather than just seeing that as a sort of part of doing business. You maybe just tell us a little bit more about that side of things, the potential for systems change and where you think that could go. Obviously, these things take time.
Well, I think that systemic inequity really is key to what we're trying to do. The fact that, again, if you're an oil company, oil spillage as part of your exploration work is a natural outcome. But if because of that litigation resource imbalance, you can pay pennies on the dollar in terms versus the true cost of whatever that spillage may have been, you probably are incentivized to spill more in your exploration and your operations than you might have otherwise. Now, that's relatively simplistic logic. But if you can, via litigation investments, effectively raise the price of those settlement outcomes, raise the cost of that damaging activity, you should have an opportunity to change that behavior in a fundamental way, because it should make more commercial sense to change behavior at the front end rather than deal with the costs on the rear.
And do you see, because I think one of the interesting elements as well that we found is you're able to unlock cases that other funders won't go near. They have quite strict payout ratios they look for. On that side, it'd be interesting to kind of hear what you're seeing from a pipeline perspective there, if other funders are starting to show more interest in this area. In the long run, actually, it'd be great, the more that do as well.
Well, I think, yeah, there's a huge displacement of capital in the space. I think there are about $20 billion committed to litigation funds globally. That's against about a $300 billion annual, call it addressable litigation market. You are seeing other litigation funds show interest, probably more on the back of, call it the lighter touch ESG elements rather than sort of a more focused strategy like ours. But I think it's around our flexibility. I mean, we're in the market in a very sort of competitive returns environment, but we double down on our own underwriting. We're able to take a look at how litigation financing is priced and ensure, and I think we're the only ones certainly in the UK that are doing this, we won't go near an investment unless the significant majority of that potential case outcome stays in the hands of the claimant and claimant groups. It's critical to the impact thesis behind all of this. The litigation funding community writ large is, let's say, less sensitive to those metrics. So we are different in that way. But I think we continue to see opportunities to align with the communities in which we invest and share in those upside scenarios to drive returns, while making then sure that that significant opportunity is left for the communities themselves.
Thanks. And maybe before we go to question, it might be interesting to actually hear another example from the portfolio actually, which kind of showcases that.
Yeah, sure. I mean, and I'll take a look at my general counsel to make sure I'm not speaking into anything. But and this actually sort of goes to show there are obviously things in our portfolio that are evidently impactful, cleaning up oil spills, dealing with climate damage. But what we're educating very traditional, non-impact oriented law firms about is what's in their pipelines that, because of the circumstances, are generating impact outcomes. So we're supporting a group, a community, a council that represents the interests of a significant number of similarly very sort of destitute islanders who have a pure shipping contract dispute with a shipping provider, commercial shipping provider that provides goods, services, food, so on and so forth. The contract stipulates very clearly that the provider is meant to self-report and pay a fee every time they show up to dock. But because, lo and behold, this provider is in a monopolistic position, is a key service provider against another side that doesn't have any leverage whatsoever, they have, let's say, chosen not to fulfill that side of the contract for a number of years. So this, as you look at it, boring piece of contract litigation. However, if successful here, the type of outcomes in the 30, 40, 50 million Australian dollar range that we might realistically be able to see, we know for a fact from dealing with the council, they're building schools, they're building hospitals, they're providing key health and social services to their communities as a direct result of pursuing this litigation to exactly assert their rights in a way that they wouldn't be able to do without funding.
No, and that's what was really impressive actually when we looked at the diligence you've done, is actually really following, actually tracking where that money goes and outcomes. I think flood defences as well, and making sure that a successful outcome is really going to improve the lives of the islanders. With time, wonder actually, would you maybe open up if there's anyone in the audience who has a question or two for Rob?
Hi Rob, thanks very much. Can I just ask you, do you look at the unintended consequences of the impact, the financial impact on your counterparty if they were to lose, for example? So I think you mentioned earlier that you do fund cases against governments, local and I guess probably state as well. Thinking about the case against the city of Birmingham, which pushed it into bankruptcy, obviously they should have paid equally across genders, but they didn't. But that of course has led to very negative and unintended consequences for people in Birmingham more broadly. So would you consider the impact of the loss on the counterparty when you decide whether to take a case or not?
Absolutely. It certainly must be considered in each instance. Similarly, in the case I was just mentioning involving the commercial shipping provider, they are provider one of one in the region. If they were put out of business, then there wouldn't necessarily be a shipping provider to bring in key goods and services and so on. So it must be taken in context, absolutely. And I think we generally do take the view that up to those scenarios where you can cause significant and measurable negative harms, that doesn't excuse the behaviors or the breaches that led to that position in the first place. So it's a balancing act, absolutely, but I think you've got to try to strike that right.
I was wondering if you can give a little bit of more details about what are the typical economics of a case. What's your investment? What are you buying, and what is the return of what you buy?
In simple terms, so it's non-recourse financing, so we're paid back only on success. Generally, depending on the length of time, it's already keyed up against the key cost centers of a piece of commercial litigation. It's funded on a drawn down basis, depending on the time period at which the capital's been at risk. We'll either get our returns and capital back on the basis of a multiple of invested cash or a percentage of the outcome, generally whatever's higher. And all of that is negotiated out very transparently with the claimant and claimant groups ahead of time to understand, because the claims always remain, from a decision-making standpoint, in the hands of the claimants. We provide the financing and guidance and advice, and are actively involved in helping to steward the relationship, but the decision entirely remains with the claimant or the claimant entity. We were in the market at a 20% net IRR. That usually means an average investment life of about 30 to 32 months. We're looking at about a sort of 2.25x gross multiple on a case-by-case basis. I could go on.
Was there one more question back there?
Yeah, back to the first question. Do you have any impact linked carried interest and impact committee with your investors, if you have investors, LPs?
We do have investors. We're structured as a closed-end fund. We're developing an impact advisory committee. We're about 18 months into our first fund, so this is the first time the strategy has been in the market. We worked very extensively in the early days. Our cornerstone investors, the Capricorn Investment Group, who provided the resources of the Bridgespan Group to come in and help develop our impact assessment and screening methodologies. So what we've done so far is, we believe, working and is quite rigorous, and we always want to add to that over time.
Was the question also about impact link carry specifically?
Yeah. Impact link carry. There's no specific link between impact and carry for this fund.
Or do you have one? Yeah, we got one.
Thank you. In litigation, you're often encouraged to settle, and sometimes might even be penalized if you don't. But the impact you might have might be far greater if you actually get a judgment in court. How do you balance the two?
So our strategy generally is seeking non-trial outcomes, whether those are settled or negotiated otherwise. I actually, just by background, I spent a number of years as the head of fundraising and development at Client Earth, using public interest strategies to drive positive environmental and climate outcomes, where generally what you were looking for was the moment on the courthouse steps and the publicity and the PR and so on. Our theory of change when dealing with commercial actors is that it is around, it are those commercial and economic outcomes that will drive behavior change and are going to lead to those positive outcomes on a case-by-case basis. You'll probably be aware in England and Wales, I think it's about 82% of commercial claims are settled in advance of trial. So that is the arena in which we're operating and playing. So I think that's very much what we believe that the impact can and does flow from settled outcomes, even if we're not even going all the way through to trial.
We'll be over already. Thank you so much. That's fascinating. Thank you, Rob.